Welcome to March, my awesome viewers. I want to start it by sharing this picture to summarize the weather we had in February this year. You might have seen many fenced pools, but this is a fenced pool which has been fenced by 2 feet of snow. How is that for a backyard swim? So let's get on with the update for the month of February. I'm going to break it up into 3 main points. We'll start with US, come home to Canada. I'm just going to share a small conundrum that I see in front of ourselves. So here are the numbers for the month of February. It was a good month. We saw the interest rates creep up in the last week of February. That was on the back of optimism for the US-China trade talks and what that means for the world economy. Optimism there, bond prices took a small retreat and equities took a bit of pause. In fact, if you compare the S&P 5 or look at the S&P 500, it has recovered almost 80 to 85% of the losses that were reported by in the last quarter last year. And this has been on the back of a strong performance by the US economy, which reported a 2.6% annualized growth rate in Q4 2018. So overall, I think the picture is looking good on the US side. Now, if you come back to Canada, it was a different story. The year-on-year growth has flatlined. So the recession word is not out there yet, but we have to wait and watch. And what impact that has for us as Canadians is that the consensus estimate of Bank of Canada is that they are going to hold on to any further rate increases. So that's good news for anybody who's looking to renew their mortgage. And third, what I want to point out is the conundrum. Now, one important thing that happened in February is the Berkshire Hathaway annual report. Now, and if you look at what the holdings are, it's Warren Buffett or Berkshire Hathaway, they're holding on to about $110 billion of cash. And the reason for not deploying that cash is because they think that the prices are not cheap enough. And you compare that $110 billion of cash allocation versus the rise that we are seeing in the indices, and that makes you wonder which side of the camp you are on. Now, however, to support this dichotomy, I just want to share this one chart with you, which compares the bear market we had in December versus the other bear markets we've had in the past. And you can see from this that the recovery has been far more steep. This data is as of Feb 4th, and it's gone up since. So the recovery has been far more steeper than what we've seen in the past, which makes me believe that we might be on a precipice of another volatile session as we head further into 2019. Now, to wrap up my update, RRSP season is behind us. Hopefully most of you are expecting a big refund from the CRA. And if you want ideas as to what is the best use to deploy that refund, give me a call, 905-363-5035. We can work out a plan. The second thing I want to report is that the workshop for this month, again, Women in Investing, third Thursday of every month, happens to be March 21st, this very location, CART head office in Mississauga. Some of you had asked me about my resolution for the New Year's. So I'm very happy to report that I went 42 straight days, starting Jan 5th, without any sugar, and I broke that with a bowl of ice cream on family. I want to wish you a very warm and sunlight-filled March getting ahead. If you have a March break planned, have an awesome time with your kids or grandkids. And I'll be back again in the first week of April. Thank you so much for your time, and bye for now.